Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the dollar and commodities, and the news this week is Trump tweeting about not liking rate hikes, which had a significant impact in volatility. We saw the dollar drop in response to it. He's now tweeted a couple times about it. And gold saw an oversold bounce initiate because of the dollar weakness in response. So I have to obviously be keeping an eye on this and what the Fed does in response and the rates, because what the dollar is going to be doing is going to have a significant impact on all of these commodities. And now we have headline risk, essentially, that we have to be watching out for with these tweets. So the dollar is on the weekly time frame. It did head to a higher high, but there's still clearly a resistance zone here. And if we just look at the $95 level, the $95 level has rejected weekly candlesticks now. Let's see, 1, 2, 3, 4, 5, 6, 7 of the last 8 weeks in a row. So very clearly, there is still a resistance point in this area between 95 and 95.50. We do still have weekly higher lows to be watching. The most important support for me short term is 93.71. If we lose that level, it's 93.19, but there's the potential that we start losing this higher low pattern and we pull back to the low 90s for the dollar to have to establish a new clear higher low support. And if we look at the monthly time frame on the dollar, we've seen essentially 5 green months in a row. So we could be getting a little bit toppy, and the monthly chart may have to establish a higher low at this point if looking to change the longer term trend more significantly. So that's worth keeping an eye on. And again, bearish reactions. Let's look at the short term bearish reaction we had when these tweets came out. It was just all out dumps, and it happened a couple times. So clearly a shift in sentiment. And with that, gold is trying to bounce. So gold on the weekly is almost oversold. We have a long lower wick. It is a bullish reversal hammer. We'll see if we get confirmation and follow through this coming week with another green week. But if we look at the daily time frame, we see that the bulls are nowhere near doing anything to change this trend. So I'm looking at the last clear lower high up at 1266 with rounding, and there's another resistance level here at 1248. So a couple resistance levels to be watching, and at this point the bounce is clearly underway, and the question is, do we just form another lower high? And if we do, in order for the bulls to change this trend, we're likely going to have to form a lower high, higher low, and then a higher high to see that reversal. These 12 and 26 period exponential moving averages, I use them for cryptocurrency trading, but I am starting to incorporate it more in other things, and we're seeing clearly that it's been a pretty good guide for gold, rejecting the gold bounce attempts. So turning those levels into support and seeing a bullish cross will be notable. The last bullish cross that we had of these exponential moving averages did lead to significant upside, and the last bearish cross that we had, you can see they're pretty good here in terms of, they're not nailing the bottoms, but they are showing the significant changes and shifts in momentum. So one thing that's notable is we did lose the weekly higher low pattern. This was a very clear bear break, which has us looking for a weekly lower high and a potential bearish entry on any bounce that does get followed through cooling off that daily RSI level. One thing that I want to point out is the gold miners. So I made a video recently introducing people to miners and potentially trading the gold sector. And one thing that I'm watching is the monthly chart for the junior and senior miners, GDX and GDXJ. And what this shows me is that even though gold is oversold on the daily and dumped on the weekly over the last few months, these miners are still in their tightening equilibrium patterns with no clear break at this point. And they actually have about 6+% space of wiggle room before we do lose the higher lows. So we're likely to remain within this pattern for a couple more months, and I say that because we're likely to see gold at least get a short-term bounce, which would help stay in this pattern. So why are these miners so much stronger than gold right now? In my opinion, it's because the market is so strong. The S&P 500 is eyeballing the all-time highs. We've got the tech sector at all-time highs. So because these miners are made up, the stocks that are on the market, there's correlation to the S&P 500 and the major markets as well. So I do believe that is helping things, even though gold is weak. When we see these miners react the most significantly with the most volatility, it's when the market and oil and gold are going in the same direction. So if the market's up and gold is up, these bull miners really fly. And when the market's down and gold is down, we see the bear miners see a lot of upside. So we're watching for a break of this range. The key support on GDX at this point is 2084 and resistance is 2331. So still a pretty wide range in between there. And for GDXJ, support is 2988. Resistance is 3436. And just looking at the longer term time frame for the monthly chart on gold, we can probably stay within this range for a long time. And by a long time, I'm talking, a year plus. And the range that I'm looking at is the initial high of the bounce and the initial low of consolidation. So if you look at that range, we've been trading within this range now at this point. It started forming, let's say it was completely formed back in December 2016. So we're over a year and a half of staying within this range. And I'm going to be looking for a higher low here. Even though we lost the strongest uptrend, I'm looking for a higher low compared to 1122. And to stay within this tightening range for, again, some considerable further amount of time. The monthly volume is declining. That's worth noting as well. We're not seeing accelerated action to the downside. So I am anticipating a monthly higher low to form and for a bounce and then potentially a lower high. I'm going to be looking for gold to trade within this range. And if you look all the way back, the majority of the last 5 years have been within this range. But that clear break is going to be very notable. But I do believe that these miners on their monthly charts, because they're so much tighter, there's a lot less room in there. I think that they're going to see a clear break long before gold does from this current range. And here we are right in the middle of this range right now. So that's what I'm keeping an eye on for gold and miners. As far as oil goes, oil is still a weekly higher low pattern. And we've seen a lot of weakness recently. And again, Trump's a factor here where Trump is talking about decreasing the output, or I should say increasing the output with OPEC. He's got his hands in the dollar and these rates and everything. So again, there is headline risk and really tweet risk at this point, depending on what your positions are. But essentially, I'm just continuing to watch the long-term trend. As long as the higher lows on the weekly are maintained, the bulls are just fine. And at this point, we're still well above support, 63.62. Here we are about, maybe 5% above that support level, a little bit more than that. So still, the bulls have some comfortability. And the daily chart at this point, we're watching for a trend change where we have some clear lower highs and lower lows. And our new resistance is 70.15. Anything under 70.15 is a lower high. And our low of consolidation at this point is 67.09. So if the bulls can pull off a higher low compared to 67.09 and then see a break of 70.15, we're going to look for a daily shift back to bullish. And that's going to give us our weekly higher low. And then from there, if we were to set a lower high on the weekly and then break the weekly higher lows, that would be a notable shift in momentum. Keeping in mind the monthly chart at this point is pretty overdue for consolidation. So the risk to reward does favor the bears if that weekly uptrend is lost. And we would just look for a monthly higher low to form, perhaps somewhere in the low $60 range, maybe even the upper $50 range. So that's worth noting as well. We are very extended on this oil bounce. And just going back to 2016, at this point we've bounced 200% on oil in the last 2.5 years. And now we got natural gas. So the weekly chart of natural gas, this is NGU 2018, switching over to the next futures contract. We've lost the weekly higher low pattern. That is very notable. We're not seeing an all-out dump on that loss because we dumped straight down to get to that support level. It is a bullish reversal candlestick on the weekly, and the bulls will try and confirm it with follow-through. But we can anticipate a weekly lower high to form at some point. Going to be hard to time that, but got to let the bulls cool off a little bit. We'll look for a lower high to form and the potential to head back down for further weakness. So whenever we lose a higher low pattern, I look for that next bounce to set a lower high. The daily time frame, weak bounce attempt in terms of trying to change the trend. Key resistance 275.2, and we need a higher low compared to 2671, and then a break of the lower high pattern for the daily bounce to get any kind of momentum behind it. So still haven't seen 2 green days in a row in a long time, and that is 3 weeks at this point. So the bears are very clearly in control of natural gas now that we broke that support. So the monthly time frame, look at us trading within this range for a couple of years at this point, a year and a half, 2 years, and look at the lack of support down here. If we see a break of 2674 and 2562, let's try that again, 2592, we only have 3 supports on this monthly chart, essentially, all the way down to that recent low. And it's a very clear monthly downtrend over the last 8 years for natural gas. So the bulls aren't really doing anything to change these longer term trends at this point, and we do have to be cautious and be looking for a potential lower high on the weekly and a potential bearish entry opportunity. But it's very clear that natural gas is not a very volatile place, just in terms of, well, it is volatile, but just the videos that we make. I mean, you look at the oil views and the gold views on these videos when they're individual, and it's, 300 views, 500 views, and natural gas had 49 views. So very clearly, there's not a lot of interest in this market, not a ton of traders compared to other sectors and other markets. So that's worth noting as well. So I hope you all have a good rest of your weekend, and we will see how these longer term patterns play out. Still very closely watching the gold longer term patterns. And of course, oil shorter term has had some decent volatility and opportunity as well. Thanks again. See you soon.